What's going on, everybody? Hope you're enjoying your Sunday. As always, none of this is financial advice. Trade and invest at your own risk. Let's kick it off. We got the S&P pulled up here on a weekly time frame. And the reason that I wanted to pull this up is because we use this for our investment thesis and our longer-term investment portfolio. And we like to use these anchored VWAPs from points in time that represent something of significance where there was a change in tide. And so anchoring these from points in time that have previous pivotal lows where the market has rallied from is fairly important. And you can see this past week, this weekly candle came down, tested this anchored VWAP, and then rallied back up to this 10 SMA. So that's fairly significant. And if we wanted to take a look and see what that looks like on the daily time frame, and this is what we utilize for our swing trading positions. And as most of you know that follow me, we've been doing a whole lot of nothing ever since we went into a no trend back in here. So we missed all of this downward price action, playing patience. This was an area that, we were targeting. That I mentioned, hey, can the market rip higher? Absolutely. But is it a great high odds trade that it's going to reverse right here? No, absolutely not. And the reason that is because we need time frame alignment, number one, and we also like to put the odds in our favor with price above the major moving averages like the 10 and the 50 simple moving average, which that's essentially what this cloud is that you see. So if we take a look at what this looks like on the weekly, you can see this is anchored from this previous pivotal high, and we've had multiple touches here, here, and once again here. And then finally this past week, we reversed higher, right back into, guess what, a pivotal level of interest. Now, those of you that follow, I don't make these levels up. Last week, I created a video on how I find these levels. Essentially what it is, it's just finding areas that price has interacted with on a horizontal basis, and then correlating that with Fibonacci, either extensions or retracements. Very simple process. Just takes a little bit of time to truly understand price structure and markets. But you can see, guess what? We closed right at that level on the S&P on Friday. So that is a very important level of interest. Now, in the Nasdaq, came and filled the gap, and once again, right at this level, still closing below this level. So ideally on the Nasdaq, I'd like to see a close above Thursday's high, which on the Qs is 374.04, before I start to get more aggressive and start allocating more long market exposure. Technically, you could have taken the S&P long on, Friday, because we did get a close. Technically, you could have taken it long on Thursday because we did get a close above the cloud. So you would have had rules to take a stab and dip your toes in the water and get long. But really, the odds aren't truly in our favor until we can get back above, once again, this high for the S&P is 444.89. So if we start trading above that level, I'll start having more conviction in our long setups. And same thing goes for the Qs. So the Nasdaq, if we start getting above this level, I'll start having, once again, more conviction in our long setups. And we can start trading again. So we'll hopefully get back in the game sometime soon, hopefully this week. Now, if you remember last week, I said at the beginning of the week, I said it feels like we're going to see some more downside and then rip higher and then just to roll back over. So has that played out yet? So far it has. We've ripped higher, and the next thesis would be a rollover. Now, you guys know that we don't predict markets. We react to price structure. I'm not hoping that happens by any means, but I'm keeping an open mind for that scenario. Ideally, once again, above these levels, I'm going to start adding long market exposure, and I'm going to trade like a robot, like I always do, with scales and with stops. Now, the Dow Jones is still showing relative weakness. You can see we're still below the 50-day moving average. And we just now starting to close inside of this cloud. Small caps, once again, have gone absolutely nowhere. Been range bound for almost a year. Nothing to do here, nothing to see here. That being said, we are above the 10 and the 50-day moving average, but still, I don't love this trade. I think we really need to get back above this. Call it 229 on the IWM before I feel like we're actually ready to break out. So until that happens, I'm not too interested in the small caps just yet. Still, our focus is the S&P and the Nasdaq, still showing the relative strength. So one of the things I wanted to highlight is obviously crypto. We always talk about crypto. Now, Bitcoin held some levels. However, we are still below a declining 10 and a rolling over 50-day moving average, so below this cloud. Don't love to see that. And same thing with Ethereum. Once again, the anchored VWAP from this low has acted as some sort of support in the short term. You can see we also respected these levels. And guess what? Now we're coming up against the bottom of this cloud, which happens to be the 10-period simple moving average. So we really need to get back above. And you can see I actually have a trigger highlighted here. This 3,175 is a very important level. And if we get back above that, maybe you'll start allocating some more long market exposure. Previous entry on this was back here in this 2,200 level. So we had all of this to get paid. Broke trend, you could have taken some profits if you were trading this. If you're a long-term investor, that's a different story. Bonds just absolutely rolled over on Thursday and Friday after Wednesday looking like we wanted to confirm price strength and make a move higher. And then Thursday just got wrecked and Friday gapped down and went even lower. So we are not in the bonds anymore. This is not a hedge. We are still, I shouldn't say still, but we are currently fully invested in equities. USO. So what's looking good, right? What do we have? What's looking good? So oil looks really good. USO looks good. Energy, XOP, this is looking pretty darn good as well. So keep an eye out for your energy sector. We already had COP last week that paid us very, very nicely. Didn't take any heat on this trade. So Gap, Go, Ranta, one level, came back tested that level, and it looks like it wants to make a run up to the 66 area. So COP, hopefully you're still long. It is leading that sector. You guys know we like to trade relative strength and find the stocks that are leading those individual sectors. ConocoPhillips COP was one of those stocks and absolutely paid us last week during a downtrend. So that's very nice to see. And then also, we've been trying to get this entry on semis. So SOXX still looks pretty good. So these semis still look pretty good. If tech does want to lead, I think it could be semis' turn to kind of take the baton and move this market higher. When semis lead, it's typically good for the entire market. So we're keeping a close eye on semis. We're keeping a close eye on energy. Obviously, we trade the indexes very, very closely. So S&P and the Nasdaq, we're keeping those highly on our radar. As you guys know, we need to see prices back above Thursday's high before I feel more conviction to add long market exposure. So with that, we're going to wrap it up. See you guys on the open.